in trade, and at the same time metals are also showing some shines. Let's try and understand what should be your strategy for the session as well as the trading ideas for the day. For the same, we have Dharmesh Shah, Head Technical ICICI Direct, joining with us. Dharmesh, good afternoon. Thank you for giving your time to ET Now. We clearly see a volatile session in the market, and this was quite expected and anticipated. What's your view on the texture of the market and the strategy on the indices?
Yeah, good afternoon, Mansi. Yes, definitely. I think that the way the market seems to be panning out in the last few trading sessions, it looks like, I think so, we are stuck up in some range of 24,600 on the downside, on the higher side, 25,000 is acting as a major resistance in the near term. But the way the things are positioning right now, we have an expiry today. Tomorrow also we have an expiry of sensex, and I think so the two consecutive expiries lead to be some bit of a volatility, and also you have RBI policy which is likely to be announced tomorrow. So yeah, we believe, I think so there could be a bit of a volatility in the market, but expecting, I think so, 24,400, which is again a 200-day exponential moving average, should act as a very strong support for the Nifty. We should not forget we have seen a good rally of almost 1,000 points from 24,300 to almost 25,500. And what we believe is, I think so, the market seems to be retracing that move which has happened in last 3 weeks. So yes, things looks a slight bit of a nervous, but we believe, I think so, 24,400 should act as a very strong support for the market, and it should hold in this current corrective phase, and we should be looking gradually towards 25,000 in the coming weeks. So buy the dip should be the strategy going forward.
All right. Hi, Dharmesh. Good afternoon. This is Ankita also joining in. So 25,000 is the level that we perhaps can scale in the next few days. Buy and dips is the strategy that one should adopt. But talk to us about Nifty Bank, because Nifty Bank is the one that's really lending support, especially the PSU pack that has been doing well for the last 2-3 trading sessions. Talk to us about the levels one needs to watch out for on Nifty Bank.
See, if you look in this current corrective phase, I think so Bank Nifty has relatively outperformed the Nifty in terms of magnitude of the fall, in terms of percentage. We believe for the Bank Nifty, 54,000 to 53,700 will act as a very strong support for the Bank Nifty, and eventually Bank Nifty should be looking for a target of around 55,500 in the coming days. So yes, PSU banks, again coming to PSU banks here, if you look at the index of the PSU index, banking index, I think so 7,200 as a level was acting as an immediate resistance in last few trading session. It managed to surpass those levels, and currently we are trading at 7,500. We expect PSU bank index to head towards 8,000 in the coming days. So yes, PSU banks are something which are clearly relatively outperforming in this current corrective phase. So stock, to give you example, like State Bank of India remains to be a top pick. Again, SBI, if you look post QIP, I think so at 795. We are seeing a gradual up move happening for SBI. A long consolidation breakout with the falling trend line indicates, I think so, the end of the corrective phase, and we expect, I think so, SBI should relatively outperform in the coming days. So we can look for SBI, one can for a target of around 915, keeping a stop loss of around 815. So SBI remains to be a top pick inside the PSU banks.
All right. Dharmesh, thank you so much for giving your views and talking to us about the fundamentals on the markets, and also helping our viewers navigate through what their strategy should be at the current juncture. Thanks a lot, and have a nice day to you.
Thank you.
Let us now move ahead and talk about the stocks and news that are doing rounds on the exchanges. Out of a lot of stocks